Okay, welcome everybody, welcome. So thank you all for joining. So we are here at session number 6 of 8. So we are 3/4 of the way, or will be after tonight, through with our training. So welcome again. Tonight is state night, which is always one of my favorite nights. So in a little bit more detail, we'll do a few general updates, talk about volunteers, clients, and then go into state training. This is, again, mostly non-resident focused, but we will include a little bit of resident information, sort of state by state. We'll do a little practice, and there'll be more practice for everybody. We'll take a break somewhere around an hour from now, and we'll find an easy spot to stop then. So a couple of updates on volunteers. First off, there are several of you, a good number of you, that have signed up for Tax Clinic. So thank you very, very much if you've done that. If you are one of the 11 people that have not yet signed up, I will be reaching out to you again. I know I sent an email to a bunch of folks this morning, so I will reach back out again to try to get you to sign up. So now is kind of the time where we need to get the plan together and see who's going to be doing what at what events. Occasionally we will consolidate events. If we get, no volunteers or one volunteer, we may cancel them or move a couple of them together or change format, going from like in-person to remote or something like that. But at this point, we don't have any plans to make any changes. We just need to kind of see how everything shakes out as people sign up for their events. This is what it sort of looks like for all of the events. So basically, it's a big mess. Don't worry about any individuals. Just look at light blue is capacity for volunteers, and dark blue is the capacity or the people that have signed up for Tax Clinic. So we've got a few of the remote events that are already full, but generally most of the events are still open. 2 words for everybody: road trips. We would love to have you join us on those. They really are a great time, and the trips, the colleges that we go visit, definitely give us some good money to treat you much better than we do at home location. So hopefully you will be able to join us there. The tax clinics are open for the season. The emails went out yesterday, so we have unleashed the horde on the people. Everybody can and should get a free membership. If you want to, you can certainly do that. I highly encourage you to do that, right? You can do your own taxes for free. Why not? If you meet our income limits and all that kind of good stuff, you can see what the clients see. So if you have a school email, please use that school email.
Do you guys know how to connect this?
And yeah, Elizabeth, if you're asking me about that, I don't know that I do know how to connect it. So if it's trying to connect a laptop, usually there's like the little cords and the little well in the top that you can plug it into the laptop and everybody can see. So, but anyway, coming back to volunteers signing up. So if you have a school email, go ahead and sign up with that. If you're one of our community volunteers that doesn't have a school email, we can switch you over to a VITA membership, so you'll still have access. If I deny you because I missed that you were a VITA volunteer when I was turning everybody else down, please just send me an email to the volunteer email account and I will fix it. So the way to join is just go to the NR Tax Help website, nrtaxhelp.org. There's a nice big blue button, click on that, and then just pick your school membership or the North membership. All right, a couple of words on members. So really quick, it's been open for less than 24 hours. So we have, as you can imagine, a small number. It was like 300 or so people. So we ended up last year with 7,500-ish or something like that members. So it's very small to start with. That is totally okay. As we go over time, right, February and January are always really slow months. It really starts to pick up kind of middle to end of February. We'll also have people renew, so that's where that line here will start to creep up here where the renewals are, and then the growth for new members will take us off that way. So we'll keep an eye on that as well. In terms of appointments, so people are already signing up for appointments. The first office hours is almost completely full, so not really too much of a surprise there. The first tax clinic as well is also pretty heavily booked. And then there's just a few random people that have scheduled appointments out there. Our current capacity for volunteer or for client appointments right now with everybody that has signed up is about just under 1,000 appointments. So that is really exciting to see. When the remaining folks start to sign up for their clinics, that is definitely going to take another kind of big jump as well, which is fabulous. All right, I'm going to give a little bit of homework feedback now. So as we look at this, so for Harold in particular, right? So I'm going to say, right, it's very easy on the 8843 and the Schedule OI to miss some of those little data entry points, like the current visa for the Schedule OI or line 1B for the schedule or the Form 8843, right? It's not obvious. And if you're not paying really close attention, it's very easy to kind of miss the spot where you're supposed to enter the information. And it's also not really obvious when you're doing it, like, oh, this is the one that goes on to the Schedule OI. And so I have to put like the 1/1/2025 date on that. And this is the one that goes on to the 8843, and I have to put the 1/10/2024 date on it. So it definitely takes a little bit of practice to figure out which things go where. The other thing I'm going to say, right, is that before you send me a PDF, take a look at it. Make sure everything is correct, right? You have the solution for Harold. We did that back in November, I think it was, maybe December, but I think it was November, right? So you know what those forms should look like. And so when you send me a form that looks different, I'm kind of like, I don't know that you actually checked them to make sure they're good. And this is really important because this is going to give you some practice doing that quality review technique and quality review process that you're going to be using when you're helping clients. I will say that mostly volunteers were good with the main forms. It's usually just a little bit of details that were wrong. Occasionally, just kind of went all a little bit crazy, but that's okay. That's why we practice. All right, for Kim, the main feedback there, right, is that state tax refund is taxable income. There were quite a few folks that missed this. Either they didn't know that it was supposed to be taxable, or they tried to use TaxSlayer to figure it out, and you found out that TaxSlayer does not work very well for this, right? We don't need to include federal refunds, but when we put state refunds, we need to determine if they are taxable and put them in. If it goes in and it is taxable, it's going to end up on Schedule 1, which is at the top of that, and then onto the 1040 NR line number 8. The entry area is in the 1099G box 2 on the income screen. The challenge here is that TaxSlayer is not smart enough to really understand that Lee or Kim or any of our people is a non-resident and like what that would have meant filing last year. So if you put it into like their little calculation form to say, oh, like this was my income and these are my itemized deductions, it's going to say, oh, you had like $350 of itemized deductions. The standard deduction is like $14,000. You must have used the standard deduction, and so your refund isn't taxable. They don't take into account the fact that Kim was a non-resident and she couldn't use the standard deduction. She had to itemize, and so it will not calculate that properly. So the ways to avoid this are you can enter it in the override as taxable. You can also just say that she was married filing separately and her spouse itemized, which is 100% not true. That would be a lie, but that will trick the software into treating it like she couldn't take the standard deduction and she needs to do the math to determine if it was taxable or not. So one of the fun challenges you are now seeing for TaxSlayer with us. All right, are there any questions on any of this before we go any further? All right. All right, well, I'm going to move on then. And let's start talking about states. Okay, so the Non-Resident Tax Help Group partners with colleges and universities all across the United States to support international students, scholars, teachers, and researchers. So as we look at that, we should talk about like, where do we think our clients are going to be coming from, right? What types of tax returns are we going to need? Now, half roughly of our students in our schools are here in Minnesota. Maryland is our next biggest state school, Pennsylvania after that, and then probably New York. We also have partners in a bunch of other states. Those partners are not maybe quite as big, but they definitely still need help as well. That's in North Carolina, Alabama, California, Kansas, Arkansas, Utah, and Iowa. Something like maybe 600 or so returns kind of spread out around there, plus a whole bunch of other little random ones. We also support schools in states that don't have an income tax, such as Washington. So we're going to see probably something on the order of 5,500 or so returns with a breakdown like that. And then of these, we are also going to definitely have maybe 15% or so that are going to be multiple state returns. So this is relatively common for people that have summer internships, right? Often they will be going to school in one state, they'll get an internship with a company somewhere else, they'll go to that other state, they'll work there for the summer, and then they'll come back. This also can happen for people that graduate in the spring and then start working a new state in the summer or fall when they start like OPT. It also can happen for people that transfer schools, where they're in one school, they move to a new one. Now they've got 2 state returns that they need to complete. Just to give you guys a visual, this is kind of the spread. So that very light blue, that's people that we probably won't see very much of. The medium to darker blue, and as it gets much darker, there'll be more of them. Kind of that's what the spread looks like for us as well. And then, of course, all of the ones where they don't have any state income tax, those will be great. So let's talk about expectations for state tax returns, right? So we don't expect experts or volunteers to be experts in all of our states. We used to do that, but we used to do that when we had a lot fewer states, and it was a lot easier for everybody to know all of them. What we do expect is that our volunteers are going to have some level of expertise on the most common states. So everybody's going to learn Minnesota because that's our most common state. We have half of them. We're going to also study the big ones, Maryland, Pennsylvania, and New York. And then you'll also get the chance to study your local state, whether it's where you personally live or a state nearby. You can learn that one as well. We expect volunteers to use the resources available to them, right? So we have a consolidated 4011, which has a supplemental state tax section. I believe that is still out on the Moodle and the reference materials. It's going to have like your guide to this is the rules for doing state number whatever, or state named whatever. And so we expect you to use those to try to work your way through the state returns. We have personalized guides that will provide guidance for doing state returns as well. And so we expect you to like steer the clients to doing those through the personalized guide. And we expect you to be able to do that as well so that you can see how to prepare returns in those different states. Now, I completely recognize, right, that not every volunteer is from a state that either has a local income tax or is from one of the states that you're going to be learning about here. The thing I'll say to that, right, is that this is a coalition of volunteers and organizations across the United States. Volunteers in states help your school. You help volunteers in states with other schools. So it's kind of a big circle. We're all here to help each other succeed and help the students, international students around the United States file accurate and correct tax returns at both a federal and a state level. All right, so in Moodle, it should have opened 17 minutes ago or something like that. There is another state quiz. It's not really a quiz, it's more like a survey. So this is where you get to tell me what you would like to do for states. Everybody's going to get to do Minnesota. You can tell me what you would prefer for Pennsylvania, Maryland, or New York. And then you can indicate your preference for at least one of, that is not 5, that's more like 7 or something like that states. So one of the other smaller states. You can also choose multiple states if you say, oh yeah, I really want to do, I'm going to make it up. I really want to do Alabama and Arkansas because I hate the cold weather and I'm going to go live somewhere down there. Totally good. Pick those and we can give you both of them. This is due on Sunday, February 1st by 5 p.m. If you don't complete it, that is totally fine. I will get to assign you states then in that case. And basically what we'll do is we'll just kind of broaden, give a decent mix of people with different states if that happens. So if you have a preference, fill out the survey. If you don't have a preference, don't need to worry about it. What does learning a state look like? So for each of the states that you're going to learn, we're going to do kind of 4 pieces. You're going to do a quiz that's going to ask you questions about the state tax residency, the tax rules. We're going to walk through a bunch of states tonight so you'll kind of get a feel for what the most common sort of scenarios and situations are. Then you're going to prepare a scenario for this state, right? So we're going to do another example like Nick or like Sergio. That is, okay, now Sergio is not living in North Carolina. Now he's living in Kansas or he's living in Alabama or wherever it might be. You're going to do a quality review quiz for the state, right? Here's a return. Is this really good or is this not so good? And then you're going to do a multi-state return. So we're going to do a return where it says, okay, here was, Elena. She was in Minnesota and it was terrible. It was way, way, way too cold. So she moved out to North Carolina or something like that. And then you'll get to do the return for her there. For training, we're actually going to kind of approach it slightly differently. We're going to start with the easy states and sort of work our way up to the harder states. And so as we look at that, the easiest states are the ones that don't have any income tax, which is fabulous. We love them. And those states are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee. They do have a tax, but it's only on interest and dividends. It's not on wages. Texas, Washington, and Wyoming. So anybody that works in one of those states most likely won't need to file a state tax return. Their W-2 boxes on the bottom, the boxes 15, 16, 17, that's the state section and local section, and those will likely all be entirely blank. If you were in TaxSlayer and you said, oh, I want to do like a Wyoming return, it would say, nope, sorry, there aren't any forms. You can't even do anything in the software because there's no tax return. For non-residents, one of the big implications as well for this is that these individuals, right, they're itemizing. The big itemized deduction we usually have is our state taxes paid. If they're in a state that doesn't have any tax, there's no tax paid. So they likely may have no itemized deductions at all for those individuals. They'll just pay tax on all of their income. All right. The next easiest ones are the ones we don't provide any training on. Right? So if we provide some training, we expect you to use our tools, use our resources, and support the students with those. But we don't cover all 50 states. We maybe will someday, but for now, we don't have the knowledge. So if somebody comes to you and they say, oh, I need to do a New Mexico return. What we can say is, we're sorry, we're not trained to help you prepare a state return for New Mexico. So we can't help you with that. However, you should know, and we'll tell everybody this and we'll see it in TaxSlayer, right? The guidance that TaxSlayer provides about choosing state residency is intended for US tax residents. And so for non-residents, that may not be the correct information for determining residency. Sometimes there can be special adjustments that need to be made. Some states don't honor federal tax treaties. Others have different treatment of different types of income. Usually, if you go to a State Department of Revenue website, you can find that information about, how do they determine tax residency status? Do they have any special treatment for different types of income? Are there treaties honored or are the treaties not honored? Things like that. So if we aren't training you or we don't have training materials for you, then we can say, no, we can't help, send them to the State Department of Revenue website. However, if we've got this stuff, we want you to use that and give them the help that we can. All right, for all of these states, we're going to start, just like we did with federal taxes, we're going to start with state tax residency. What makes an individual a resident in a state? Now, federal residency and state residency are different. Yes, they're not the same. Maybe there's a couple of places where they're the same, but at least for non-residents, they're going to be the same. But mostly, it's always going to be something special. Just like the federal returns all have something special, state returns, everybody has something special about what it takes to be there in a state. And generally, you can be a full year resident of a state, you can be a part year resident, you can be a non-resident. You can even theoretically be a resident of multiple states. So we're going to start with residency. How do we figure that out? What does that mean? Then we'll talk about how do they tax income based on the residency. Are there any special things that we need to know, like treaty things, local returns? We'll talk about preparing the return, finishing up, and filing. So that's kind of the general process that we're going to go through. And so as we look at the states that we're going to train you on, so the ones on the left are the ones that we are pretty well defined in terms of what we need to know, and we can tell you how to do them. The ones on the right, I would say that we're in varying levels of like 50 to 75 to 90% of the way there. So hopefully we'll talk about a few more of those next week. The ones in blue are the plan for today if we have time. New York and Maryland will wait till next week, plus hopefully we'll slot in some Utah, Iowa, Alabama, maybe some Arkansas as well, would be the plan there. All right, residency. Residency is a four-letter word because it changes for everybody, right? Federal tax residency is not the same thing as immigration residency, which is not the same thing as state residency. So when we look at state residency, most states base that on the concept of domicile. And a domicile is the place that you intend to make your home, so for permanently or kind of for an indefinite period. And once you establish a domicile, it continues until you take action to change it. You have to take positive action. It doesn't just like gradually change. It has to be something that you do. If you move out of a state, but you don't intend to remain permanently in a different state or country, you will continue to be a resident of that first state. One of the key things here is that you can only have one domicile. There's only one home, one permanent home that you can stay, that you can always return to. Our clients, the non-resident aliens, students, scholars, teachers, and researchers, and so on, that are here on F/J visas are not here permanently or for an indefinite period. Because of that visa, that F/J visa, they have a very specific reason for being here, to be a student, to be a teacher, and there is a time period that is established with that visa, right? It starts on this date, and then it ends on this date, and then they have to leave. And that date is already determined before they even arrive here in the US. And yes, it can change, they can do extensions, different stuff can happen, but it doesn't change the fact that they're here for one purpose, main purpose, and then they're going to have to go at some point. And so because of this, because they are here on these F/J visas, right, they cannot establish domicile here in the United States. So their domicile, their home is still in the country that they were in before they came to the United States. So let's start with our first state. Let's talk about Wisconsin, which is one of our easiest states. Wisconsin is great because if you are a legal resident of Wisconsin for tax purposes, means somebody who is domiciled in Wisconsin. That means that all of our F/J visa holders are automatically non-residents for tax purposes. There we go, super easy, right? That's like the best situation in the world. We don't even have to think about it. You got a 1040 NR. If it's a Wisconsin person, there are going to be a Wisconsin non-resident as well. For US citizens, that would be the question, right? Are they domiciled in Wisconsin, right? Is there permanent and indefinite home in Wisconsin? Easy yes, right? If they lived there with their parents before going to college, right? College is generally a temporary absence. If they come home over the winter break or over the summer break, if they still have their parents supporting them, all those kinds of things, right? Those are not steps that would have changed their domicile from where it was in Wisconsin. Wisconsin will use the same filing status. So if you were single, you're going to stay single. If you're married filing separate, you'll do married filing separate. Wisconsin does honor tax treaties, but they don't allow the standard deduction for students from India. So nobody gets the standard deduction in Wisconsin. Everybody has to itemize. You're going to pay Wisconsin tax on Wisconsin source income, which is going to be wages from working in Wisconsin. The other really cool thing about Wisconsin is that they only tax the portion of scholarship or fellowship that represents payment for services, which means that it should be reported on a W-2 because that's like payment for services is wages. So scholarship or fellowship amounts that are not payment for services are not taxable. So that includes things like housing, room and board, stipends, all of that kind of stuff. So scholarship income generally is not going to be taxable in Wisconsin. Who has to file a Wisconsin return? This is an old version. I didn't update it for this year because the most important thing that we're going to say for Wisconsin and really for all of our states, right, is that if you have to file a federal return, you should go ahead and file a state return. And for Wisconsin, it's going to be the same thing. They have a $2,000 floor for if you have to file or not, but we're going to say if you have to file a federal, just go ahead, click the buttons and file that Wisconsin return. Wisconsin does have reciprocity with a few states, Illinois, Indiana, Kentucky, and Michigan. The idea behind reciprocity is like, we won't tax yours if you don't tax ours. So if I was a Wisconsin resident and I went to work in Illinois for 3 months over the summer and then came back home, I would only pay Wisconsin tax on all of that income. I would not have to pay any Illinois tax on that income. The same goes the other way. If I was going to school in Chicago or my home was in Chicago and I came to Wisconsin to do an internship, I wouldn't pay Wisconsin tax. I would just pay Illinois tax. We aren't helped on any of those states. We don't have training on any of those states yet. So if it's a reciprocity, as long as they're a Wisconsin resident, we could help them. But one of those other ones, we would not be able to help. All right. The great thing about the tax software is that theoretically it all works very smoothly, right? Wisconsin returns are part of the software. As long as you start it, as long as you select your correct filing status, generally everything should work very well as long as the students have entered all of their information correctly. That is kind of a pretty big assumption, so we do a lot of practice to confirm, but it's fair to say that most information automatically flows from the federal to the Wisconsin forms. So as a volunteer, your real job is to make sure that you know how to check that the Wisconsin return is correct. Number one, what is their residency, right? Are they a non-resident return or not? That's going to be our first question. And then be able to fix things. Since things flow through, generally there are very few issues on fixing stuff. Usually the state residency statements, again, for Wisconsin are not good. So we provide a specific guidance in the personalized guide about how to do that. All right. And so that is a first state. That is one of the easier states. If only because it's very easy to determine tax residency status. Everybody's just straight off a non-resident as well. Let's go on to another one, California. So we get a decent number of California returns, mostly for people that are there for internships. So California domicile. Domicile this is their definition of domicile, basically a special residence, right? California kind of reviews domicile and residence is sort of the same, but not quite the same. They're sort of different concepts. So basically the idea is that you can be domiciled, but not be a California resident. You can even be domiciled in another state, but still be a California resident for tax purposes. Again, they have the whole there's only one domicile thing. You can't change it, or you can change it, but you have to take positive action to do that. There they are a little bit more descriptive, right? You have to abandon your prior domicile. So that would be like, I move to this state and I get a new driver's license and I cut up my old one. That would be an example of you've made positive steps and you've abandoned your prior domicile. You have to move there and you have to stay there kind of again, permanently or indefinitely. So the residence for California term. So you are a resident if either one of the things following apply. Either you're present in California for anything other than a temporary or transitory purpose, or you're domiciled in California, but outside of California for a temporary or transitory purpose. You are not going to be a resident of California if you are domiciled outside of California. And this is like not a legal standard, it's just their guideline, but the way they describe it is simply passing through here for a brief rest or vacation, here for a short period of time to complete a job, a transaction, or contract work. There is a thing such as a part-year resident for California, which means basically you moved into or out of California, starting or ending a domicile or other long-term presence. For our purposes, all of our F&J visa holders are going to be California non-residents, simply because they are not domiciled in California at all. And generally, they are going to be there for a relatively short period of time to complete a very specific transaction or period of work, right? They're here to go to school. There is a limited time that they're going to be there to do that. Others probably will be non-residents, particularly if they're residents, but we would want to ask some more information to confirm, right? Were they living in California before? Did they move there? Are they just there, again, short-term for like a summer internship? Generally, California has similar rules. They're going to use the same filing status. You're going to pay California tax on California income, which can be wages from working in California. It can be taxable scholarships or fellowships from a California school. California likes the money, and they do not honor federal tax treaties. So if you have a treaty that exempts wages or scholarships, you are going to still have to pay California tax on that income. If that money was from working in California for wages, or if it was from a California school organization, if it was a scholarship or fellowship. California also has a health insurance requirement, a shared responsibility payment. So the idea is that you have to have health insurance if you're there. If you don't, then you have to pay a fee or a penalty for doing that. However, this does not apply for California non-residents, which is great. There is an additional form and tax layer that we have to fill out to get that exemption, but then that doesn't apply. And it's a pretty big number. I think it's $400 or something like that last year. So it definitely is a big hit to the taxpayers if we don't get that exemption filled out properly. Who has to file a California return? Here's kind of the official numbers. It's relatively high, but for us, if you have to file a federal return, you're going to file a California return as well, if you have any California income. If you, by chance, just went there for the summer for like to be with friends, or maybe you attended school for like a short-term program and then you came back home, but if you didn't have any income in California, then you wouldn't have to file a California return. It's only if you have that California source income. California is what's called a community property state. This means that each spouse kind of earns/owns one half of the joint community property. But community property is based on where you're domiciled. So again, our F&J visa holders are not going to be domiciled in California, right? This would affect people that are married or registered domestic partners if they are domiciled in California and they are filing separate returns. I don't expect that we're going to have to deal with any of these type of returns. If we do, I have contacts out in California and can reach out to call it the Franchise Tax Board, their Department of Revenue. I can reach out to them if we have any questions about what to do. So if by chance you see somebody who is a resident alien and appears to be domiciled in California, you can reach out for help with married filing separate splitting of income. All right, so I have done fancy things here for us. So we have our first question, which is going to be a quiz for Olivia. So Olivia is a senior at the University of Minnesota. She provided over half of her own support. Her parents live in Wisconsin. That's where she grew up. She came over to Minnesota to go to school. Her parents are not able to claim her as a dependent anymore. She worked at the University of Minnesota in a professor's lab during the school year, but she went to California over the summer. She had an internship at a 3M manufacturing plant there. So we need to know, what is her filing residency status for California? All right. I will say that she is a US citizen. I didn't say that here. She is a US citizen, born in Wisconsin. What do you guys think? Can you answer the questions? We'll see what people answer. Give you a few seconds here. It's totally okay if you don't know. You can just guess. All right. Get one more person to answer and then I'll end the poll here. Thank you. All right. So, okay, hopefully everybody can see this now. So the correct answer is that she is a non-resident, right? So she grew up in Wisconsin. She lived there. She is away temporarily to Minnesota to go to school, but her home is still back in Wisconsin. So her domicile is still going to be in Wisconsin. She came out to California for like 3 months over the summer. So she was here for a very temporary purpose, a short-term purpose, and her domicile was in another state. So that means that she is going to be a non-resident for California purposes. All right. Looks like most of you got that right. So a few not right, but that's okay. All right, so when we prepare California returns, right, again, this is the part that we love about TaxSlayer, right? It's all integrated. Most of the information flows automatically. You just need to know how to check to fix things. Again, the paid, the health insurance shared payment is really the big one that you're going to see a lot if people mess it up because they won't know to do that additional form to make sure they don't get charged for that. It's in the personalized guide, but they don't always do that. And again, right, the state tax residency statements in TaxSlayer are not always correct. All right, so we are going to skip that. I was going to do a Lisa example. Actually, no, we're not going to skip that. Let's do it. Give me just 30 seconds here. I am going to pull up TaxSlayer so that you can see how to do it. Okay. All right. Oh, that is not the right thing. Practice lab. There we go. Here we are. Train Pro Web. Let's do it. Okay. Go to practice area. All right. You will get to see the magic of the software because let's do Lisa. All right. So if you remember, we did Lisa, right? She was a student at the University of Minnesota. Let's magically make her a student somewhere in California. So we can fix that very easily by going to, I'm going to look at this really quickly. There we go. Go to her personal information. And we are going to change her zip code to 95070, which is Saratoga, California. All right. Now Lisa is magically living in California. Let's go to her income and let's say that she now has her income from the University of Minnesota, which is actually in California. So we'll change this to California. All right. Now it is California. There we go. All right, the 1042S doesn't really have any state information. We don't need to change that there at all. So we'll continue on. Now we can go to the state section and we can add a state return. We can just click on California, continue. We're going to say she's a non-resident. There we go. All right, and if she had a Minnesota return, all we'd have to do is go delete that Minnesota return, change her zip code, and there we go. All right, and it's going to think about it. going to think about it a lot. There we are. Loading return data. All right. There we go. Basic information. Where is the... I can't remember. We have to do residency information. We'll do that really quickly here. We are not a resident. Residency and non-residency information. That's not the right one. All right. We were not a resident for California at all. So California status. There we are. State of domicile. We do not have a state of domicile. We are a country. So we do foreign country. Number of days that she was in California. I'm going to make it up. We're going to say 90 days. But if I was doing a scenario, we would give you some actual dates. If you were a non-resident of California for the entire year, that doesn't really apply. None of the military, none of that stuff does then. All right, there we go. And then the healthcare responsibility payment. All right. Did we have full essential coverage? We're going to say no. Maybe she would, but for this case, we're going to say no. But we're going to say that she has an exemption. We're going to put the exemption for people that were on the federal tax return, which includes taxpayer, spouse, and dependents. Select the individual is Lisa. We're going to select full year. She is a non-resident. And that's all we need to do. We go back, we continue, and we continue. And just like that, we have done the return. So if we had a mistake, we could just go in here, delete it, restart, or go back in and edit it. So that's what preparing a California return looks like in TaxSlayer. So generally, it's very straightforward. The information just kind of flows. You only have to do the additional steps for things that apply to either that state, such as this healthcare responsibility payment, or that individual circumstances. All right, so let's do that right there. Okay, and let's move on to our next state. Get this back up. So those first two examples were basically state residency determined by the fact that you're a non-resident on an F or a J visa. The next kind of group of states that we're going to do are ones where the state residency is based on how many days you were physically present in that state. So we're going to start with North Carolina. So North Carolina says that you will be a resident of North Carolina if you were domiciled in that state during any part of 2025, or if you resided in the state for anything other than a temporary or transitory purpose, right? You can see a lot of the states kind of have this similar legal language about residency. However, North Carolina has this like additional phrase. So in the absence of convincing proof to the contrary, an individual who is present within North Carolina for more than 183 days during the taxable year is presumed to be a resident. But the absence of an individual from the state for more than 183 days raises no presumption that the individual is not a resident. So what does that mean for us? Basically, we need to look at how many days that person, that's our client, was physically there in North Carolina. If it is more than 183 days, they're a resident. If it is less than 183 days, they are not. Now, North Carolina does have part-year residents, but in this case, it basically involves people that are domiciled. You either move in and you establish a domicile, or you move out and you abandon your domicile. And just for future reference, right, 183 days, right, 365 days in a year, except for leap years. So 183 times 2 is 366. So 183 days is half more than a full half of the year. All right. So when we look at this, what effect does residency status have? So if you are a non-resident of North Carolina, you're going to pay North Carolina tax on income from North Carolina sources while you're a non-resident, but you're not going to pay North Carolina tax on any other income. If you are a North Carolina resident, you will pay tax on North Carolina on all of your US earned income, or all of your US income that was earned while you were a North Carolina resident. So tax on everything, or just only tax on the North Carolina stuff. Now, if we think about it, this only has an impact if you have income from another state. If you're a non-resident of North Carolina, but your only wages are from North Carolina, you're going to pay tax on all of your income in North Carolina too, right? It's not going to change anything there. The non-resident forms generally have a calculation, almost all of them, where they say, okay, this was my total income, and then here's my portion of that income from that particular state. And then they'll do some sort of math to say, oh, well, you only had half of your income from that state, so you only have to pay half of the tax or something like that. For North Carolina, that is the form D400TC, which is kind of shows the differences in total income and North Carolina income. Who has to file a tax return? This one's really easy. If you are a non-resident and your income exceeds $0 in North Carolina, you have to file a North Carolina tax return. If you're a resident, there are definitely different numbers. It is not the same as the federal numbers for the kind of the minimum threshold there. So generally, I'm going to say if you file a Minnesota or federal return, go ahead and file a North Carolina return as well. I'm going to say that to every state, so just so you know. But anyway, if you have to file a federal, you're going to file a state as well, just so that you've sent it, you've complied with that filing requirement, and you know that you've met the requirements. All right. For more general North Carolina rules, so if you file a joint federal return, you're also going to file a joint North Carolina return if both individuals were residents of North Carolina and had North Carolina taxable income. Not going to be an issue for our non-resident clients, right? They have to file separately from their spouses, but if there are any residents that we help, if they file a joint return in federal, they do the same in North Carolina. North Carolina does honor tax treaties, which is great. There is a standard deduction amount, but it's not the same as the deduction amount for federal. And if you're not eligible for the federal standard deduction, then your North Carolina standard deduction is 0. So you don't get a standard deduction like no matter what your federal is. It's only if you can claim that federal standard deduction that you would get the North Carolina standard deduction. There is an allowed deduction for qualifying children that if the taxpayer is allowed a federal child tax credit for. So if we think back, there was a small possible group of folks that would be able to claim a child, right? They would be people from Canada, Mexico, students from India, and then people from South Korea. They would have to have a child that is a resident of the United States for tax purposes and has a social security number. This can definitely happen if somebody comes here and they have a child that's born in the US while they are here as a student. And in those cases, those individuals, if they can claim that child, they would then get this North Carolina deduction as well. All right. Tax returns are due on the 15th, just like everybody else. One other random fun thing, you need to enter the county that you live in on your North Carolina tax return. Here is a link to where the different county boundaries are to find those. All right, let's do another quiz. So we've got Nick. Probably folks remember Nick. He is a student from South Korea. So he came here in the summer of 2023. He went home over the summer of 2024 and then came back for all of 2025. He worked on campus, so on and so forth. So let's see what his residency status would be. And we're going to do another question in just a sec for Jacob. So what do you guys think? Is Nick going to be a resident or non-resident, part-year resident, or full-year resident of North Carolina for 2025. There we go. I was wondering, I'm like, nobody's responding. All right. All right. Yep. Oh, I know why. That's because you have to answer the second one. Let's go on to the second one. I'm sorry about that. So the second question is Jacob. So Jacob is a US citizen. He is a sophomore at App State studying history. He's single. This is all the stuff. So his parents live in Charlotte, North Carolina. His parents are paying for school, tuition, board. They're claiming Jacob as a dependent on their tax return. He did have a job on campus just to earn a little bit of spending money, though. So what do we think about both Nick and now Jacob? I'll go back up to Nick really quickly, right? F1 student, went home for the summer in 2024, but was there for the entire time in 2025. Jacob. All right. I'm going to end the poll and show the results really quickly. So they are both full year residents of North Carolina, right? If we look at this, Nick definitely was there for more than 183 days, right? He was there for 365 days. So he meets that physical presence test. Jacob is domiciled in North Carolina, right? That's where his home is. His parents live there. That's where he grew up. So his permanent and indefinite home is in North Carolina as well. All right. So let's talk about Nick, and we're going to show you, I'm going to do a demo really quickly of the personalized guide so you can see what that looks like. But let's imagine in this case that Nick was, whoa, my gosh. Let's see if I can launch this or not. Firefox is wanting to update. Hopefully that's not going to crash everything. All right, here we go. Yes, I know you want me to do it. Okay, so I'm going to the personalized guide. I'm going to do the training version, and we're going to do Nick, except we're going to pretend that his trip home in the summer was during 2025 instead of 2024. So are you a permanent resident? No. Are you from, let's see what countries? Oof. Korea South. Korea South is where we're from. Okay. So Nick came to the US back on August 30th, 2023. And he went home, we said, over the summer of 2025. So 5/01, 2025. Then he came back home, came back here, 08/01, 2025. Okay. He is a non-resident. Yes. No, he's not married. No, he doesn't have dependents because he is from South Korea, right? He could have dependent children, but he does not. He has a social security number. We're going to just do these really quick. So he's got a 1042S income code 20 for 2,000. Oops, 2,000, not 8,000. And then he has a W-2. I think it was $7,800 for wages. That'll be good enough. He did not contribute money to a charity. He did not make any student loan payments. He had not filed a return before. He received income from North Carolina. Yes, continue. All right, so the personalized guide is a little bit smart. It says, all right, number one, we know that you were outside of the United States from May 2nd until July 31st. So we don't need to worry about where you physically were in the United States on those days. We know based on your entry dates that you were not here in the US during those time periods. And then in the previous entry, you had said that you had only lived and worked in North Carolina. So we're going to fill it out for you as the rest of the time in North Carolina. Now, if it was something different, let's imagine that you were in Alabama, but you didn't have any wages, and then North Carolina, and that's where you worked. It would say, all right, now you've got to fill out all of that information here. How many days were you present in each of those different states? So I'm going to go back and just make this easy for us here to say yes, and we'll continue, and we'll create our personalized guide. So the personalized guide tool is going to do all of the math to count to say, hey, how many days were you present? And then it will look at your estate tax residency. We go find, there's that. So let's jump down to page roughly 78. All right. So here's some information. Here's the North Carolina residency status. Based on this, you're a North Carolina resident for the tax year 2025 because he was only outside of the US, outside of North Carolina for 91 days. He was in North Carolina for 274 days. All right, and so that's kind of how that tool it works for helping you determine state tax residency. So we build that tool or those tools in for all of our states that we support in our personalized guide. So if there's a question where you have to count the number of days, we will build that in to make it at least a little bit easier for our students and our clients to do that, and our volunteers. Okay, so that was Nick. All right, so when we look at preparing North Carolina returns, oh my gosh, stop sharing that. Okay. Preparing North Carolina returns, right? Again, it's all in the system. It's all going to flow through, right? But you're going to basically know how to make sure that things are correct, make sure the residency is correct, know how to fix issues if there are any. Generally, the information, again, on that main form that says, choose this for North Carolina or not, that is not necessarily going to be correct. So we may have to help explain that or fix that for our clients. All right, the main North Carolina form is a D400. There's an itemized deductions form, and then there's a part year residency form and a tax credit form. There is a credit for taxes paid to in another state or country. So non-residents don't get that, but if you're a full year resident of North Carolina and you went off somewhere to do an internship somewhere, you came back, you had to pay taxes in both states, you could at least get a credit in North Carolina to reduce the amount of tax you have to pay on that income. This is what the forms look like. I'm not going to go through them in great deal other than to say that his name, it starts kind of with federal adjusted gross income, and there are some adjustments from there. This is the part year form. They're all very similar to this, right? Column of total income, column of the state amount, North Carolina amount, various adjustments and deductions. The one thing I'll say here is that if we have a non-resident of North Carolina, and if they have scholarship income, the scholarship income is not going to flow through automatically to the proper place on this form. Wage income, as long as the state is entered properly on the W-2, that will flow through properly, but scholarship income does not flow through properly. You have to make a manual adjustment to get it to happen properly. So that'll be something to look forward to in a North Carolina scenario if you do one of those. All right. Any questions on North Carolina? All right. So it is 6:30 now. I think that I would like to try to get through Kansas really quick. No, let's just go ahead and stop. We're going to pause now and let me stop the share. And I'm going to pause. We will take a 5-minute break and come back at 6:37 will be the plan. So pausing now. Zoom recording. Okay, let's get going again on Kansas. All right, so Kansas also has a very similar rule, which basically means that this is from their statute here. A resident individual means a natural person who is domiciled in the state, not our international students. That's super cool. A natural person who spends in aggregate more than 6 months of the taxable year within the state shall be presumed to be a resident, absence proof to the contrary. So, and a non-resident individual means an individual other than a resident individual. So, more than 6 months. So basically, more than 183 days is going to be a resident in Kansas as well. If you were there for less than 183 days, you're going to be a non-resident. They still have this, like you can become a resident if you establish your domicile and be a part-year resident, or if you were domiciled and you leave, but that's not going to apply to our students generally. So we're going to either be full year residents or non-residents of Kansas. Whoop, I did not get that North Carolina updated to Kansas. Pardon there. Didn't get either of those things. All right. And again, I didn't get more stuff. But anyway, the same process applies here for taxing of income, right? This is kind of a theme. If you are a non-resident of a state, you're going to pay income taxes to that state on the income from that state. So if you go to a state for like an internship, while you're working there, you're going to pay Kansas tax on that income if you're a non-resident. And then if you're a resident, you're going to pay Kansas tax on all of your US income, not just the money that's from Kansas. So if you were in Kansas, you were a resident there, then you went to North Carolina for an internship and then came back, you would pay Kansas income on everything. You would pay North Carolina income on the North Carolina wages. And Kansas uses what's called a Schedule S to show the difference, like total income, Kansas portion of the income forms. Who has to file a Kansas return? So if you are a resident of Kansas, there is a limit. You don't have to file if you're under this amount. If you are a non-resident, if you have any Kansas income, you must file a Kansas return. In general, we're always going to just do that same boring line. If you have to file a state or federal return, just go ahead and file the state return. The software will do all the calculations for you. If you don't owe any tax and you just say, hey, this is my income, I don't owe any tax, that is super cool, provides proof that you filed, and we'll take that one and run with it. As far as general Kansas rules, you're going to use the same filing status as on your federal return. They don't really have this qualifying surviving spouse, so you have to check head of household if that ever were to apply. I've never seen one in our tax clinics for non-residents, but it's theoretically possible. If you're married, you're going to use the same filing separate or filing joint for Kansas that you do for your federal. So all of our non-residents, they're married filing separately on federal, they're going to be married filing separately for Kansas as well. Kansas is another one of the states, excuse me, that does not honor tax fees. So if you have a treaty exemption for wages or scholarship, they are going to make you pay tax on that in Kansas. Pardon me. Kansas does have an exemption, which is one of those taxes reduced by people. So if you get an exemption for yourself, and if you can claim any qualifying children as tax dependents, you can also get an exemption from them as well. There is a standard deduction for most Kansas people, which is this, it's a much smaller amount, but that's okay because the tax rates aren't so high. And there's additions to the standard deduction based on if you have any dependents or you are older or blind. Kansas does have a credit for taxes paid to another state. If you do, so you were in Kansas, you went to that North Carolina internship, you come back, you can claim a credit for the tax you paid in North Carolina on that income that you earned there. So that is really good. But we were just off for the break. We're going to keep on going. Let's talk about Pennsylvania. All right. For Pennsylvania, residency is going to either be domiciled or it can be a statutory resident of Pennsylvania. This is what Pennsylvania says about domicile. Same sort of stuff, right? Individual by their voluntary intention establish their true and fixed and permanent home. It sounds so very romantic. Or home for the indefinite future. It's where you will return to whenever you're absent, so on and so forth. It continues until you abandon it and establish a new one. This is fun though. A person that is asserting a change of domicile has the burden to prove the change. So you have to be able to support that. Say not just that I did it, but like there are some facts and circumstances beyond just your words to show it. They also have some additional commentary about a child having the same legal domicile as their parents or their custodians. Becoming an adult by itself does not create a different domicile. You now just have the power to establish a separate domicile. All right. A person who has a domicile outside of the Commonwealth can still be considered a resident of Pennsylvania. That's the statutory resident. This is a person that has a permanent place of abode in Pennsylvania and spends more than 183 days. However, there is a very fun thing here that's going to help make life a lot easier for us. It goes and talks about a permanent place of abode, that's a house or an apartment that can be maintained as a household for an indefinite period. It doesn't have to be owned, it can be rented. However, it's not a permanent place of abode if it's only occupied for a fixed or limited time for a particular purpose. Barracks, bachelor office quarters, quarters on ships, and other accommodations provided by an employer for a definite period do not qualify as a permanent place of abode. In addition, college dormitories, fraternity houses, and sorority houses, and off-campus rentals by students enrolled in colleges and universities do not qualify as a permanent place of abode. So that is our get out of jail free card for Pennsylvania. We are not going to be domiciled there, and we are not going to be statutory residents there because we don't meet that permanent place of abode. So all of our international students are going to be non-residents of Pennsylvania as well, which is really great. And generally for residents, they're going to be potentially they could be domiciled, or if they were domiciled in Pennsylvania before, they could be still a Pennsylvania resident. But if they are domiciled in another location, right, they're living on campus as well, right, in a college dorm, frat house, sorority house, etc. So they also are not going to have a permanent abode in Pennsylvania. They're going to be non-residents as well. So that part of Pennsylvania is really easy. Pennsylvania taxes are actually a little bit different because they don't kind of start with the total aggregate number of federal adjusted gross income like a lot of states do. Instead, they kind of do their own calculation, and they only tax certain types of income. Those things include compensation, which are like wages that you earn from working for somebody, interest, dividends, profits from a business. So if you were self-employed, gains are from income from the disposition of property. So that would be like capital gains from stock sales, things like that. Net gains for rentals, royalties, patents, and so on and so forth. Income derived through estates or trusts, and gambling and lottery winnings. One of the really big sources of income that we'll see for international students that is not on this list is scholarship or fellowship income. So it is not going to be included in their taxable income there. The general Pennsylvania tax rules. So a resident is going to be taxed on all of their income. Non-residents are only subject to tax on the income from those 8 classes of income. A part-year resident has the portion that is in Pennsylvania. They're taxed on everything. Otherwise, just the 8 different versions, so on and so forth. So, mentioned that scholarships are not there. The other thing to know, Pennsylvania does not honor federal tax treaties. So wages that are exempt on a federal return will be taxable on Pennsylvania returns. However, a scholarship that is taxable on a federal return will not be taxable or not show up on a Pennsylvania return. So it's kind of a fun juxtaposition that they're going to go opposite ways on those. So coming back to the wages though, in the federal tax treaty. In this situation, a W-2 form is going to have different numbers on boxes 1 and box 16. So if you see different numbers there, that student must have been issued a 1042-S, even if they say they can't find it and they didn't. That is the reason why those numbers are different. So for those of you that caught this and were all confuffled with it or adding a different income in, this is why Harold's W-2 looks the way it does. He is a student from Norway. He gets a $2,000 treaty exemption for wages. The university says, great, that's wonderful. $2,000, no federal tax taken out. $6,000 of wages, we'll take out federal tax for those. We'll report those $6,000 as federally taxable wages in box 1 of your W-2. Pennsylvania, because there are no treaties, all of it gets taxed, so we're going to report that full $8,000 as state wages down at the bottom on box number 16 and tax from there. All right. Little digression on the 1042-S forms, just to kind of give everybody a little bit more information. So W-2 forms are generally provided, usually electronically at this point, and they're provided by the end of January. So most people that are going to get them probably already have them by now. 1042-S forms are often provided by paper mail, and they are required to be provided by the IRS by March 15th. And many organizations, particularly the ones that outsource this, do deliver them on or around March 15th. So often students will come in, the student that probably would possibly receive a 1042-S, they'll come in with only a W-2 and they'll want to file, particularly if it's like early in the year, like, yeah, I want to get my refund. I'm going on spring break or whatever. So in the first part of the season, we need to make sure we ask, are you going to get a 1042-S form? Usually they can try to go to their payroll to confirm if they're going to get one or not. We can ask, hey, did you go ever sign any treaty paperwork or anything like that? The other thing that we can do that is going to give us a huge, giant clue is look at the W-2 for states where we don't honor treaty benefits to see, are those numbers the same, right? That is a big flashing sign. Hey, I'm pretty sure you got a W-2 and a 1042-S. You should really wait before you file. All right. If they only have a W-2 but have a treaty benefit, like what happens if they do file, right? We're going to reduce their wages. We're going to go ahead and claim that treaty. This is great because they've already paid tax on that income. This is Sergio's example, right? He got like $500 some on his refund. They're going to get a big refund as well. It's going to look wonderful. But then like a month later, if that 1042-S shows up, now they've double counted, right? They've taken off, they took off $2,000 on a 1042-S. They took off another $2,000 on their tax return. So they've underpaid their taxes. They need to file an amended tax return. In this case, the software probably can handle it, but not always. We are supporting amended returns for the first time this year, but we do have some limited capacity to do that. So we can probably help them with it, but they're going to have to fix their return. They're going to have to pay back probably most of their refund that they received. And they might also need to pay a little bit in interest and penalties if they don't get it fixed and that money paid back by April 15th. So it is a mess. We definitely want to ask anybody that comes in, if they're from a country that would have a treaty benefit for wages or scholarships, just ask the question, hey, are you going to be getting one of these documents? This is another reason why when we look at our tax schedule, it's really quite light through about March 10th, 12th, 15th, something like that. And that's because, we know that there are a bunch of students that will make this mistake. And so there are some that aren't going to get those forms from countries that don't have any treaty benefits like this. And so we can go ahead and help them, but we do it to kind of minimize the amount of trouble that people can get into. All right. A couple of other fun things for Pennsylvania tax. So joint returns are only for convenience. So there's not really like a married filing separate, married filing joint. It's basically 2 columns on the form, 1 person, second person. If you want to file the form together, you can to cut out on paper, but you don't have to. It doesn't have any effect on the tax amount that you owe. Pennsylvania also has a flat tax rate, this 3.07%. No real deductions, no real credits, which is great. It makes it really simple and straightforward. Almost always there is no state tax refund or additional state income tax owed. I will say that as you are preparing returns for scenarios, this is a pretty giant clue. If you have a Pennsylvania refund or you owe tax, probably you did something wrong. I can't like 100% guarantee it, but I can like 99% guarantee that if you have money owed or money returning to you, that something has gone wrong somewhere. All right. The reason why Pennsylvania is not kind of up further in the easy range is because they also have a local tax. This local tax is based on where they lived at the end of December 2025. I forgot to update that one. It's a flat rate. Once again, another giant clue, right? This should be even Steven when you do the tax return forms. If there is an amount that's owed or they get a refund on it, generally that means that something has gone wrong somewhere on the forms. Now, TaxSlayer Practice Lab sort of has the forms to do a state and a local return. They definitely have the state, but the local return. There is the ability to do that, but you have to kind of manually enter a little bit of information in there. The information about how much tax you owe is based on the kind of the area code for where you are. There's a school code that you enter, as well as a PSD, which I forget, political subdivision, I think is what the PSD stands for the local income tax return. The Lehigh University is our main partner in Pennsylvania. And so here are the codes for kind of this area surrounding Lehigh University. For individuals that are kind of further away, they possibly might be in a different area. I can show you here how to look it up. This is where the information is. So they're in Bethlehem Township right there, kind of in the middle. School codes for all of the surrounding areas and how to find those here. You can just put in your street address and look that up. And this information is provided in the personalized guide for everybody that's doing a Pennsylvania return, so they can find it themselves. And if they don't do it, then when you're helping them, you can send them back here so that they can look it up. Here's how you can look up your local political subdivision code and the tax rates. And this is what the output looks like. 1% is a very common tax rate for these. So just so you're ready to look for that. All right. So one little fun complication. So Pennsylvania has entered into the NISTOA agreement, which is basically like a group of states on the East Coast that all kind of got together and said, sure, yeah, let's all have reciprocity among each other. All right. The challenge here is, right, is all of our people are going to be non-residents. So there can't be any reciprocity with the other states because if you're not a resident of Pennsylvania, there's no reciprocity for like Delaware or Connecticut or any of those other ones. So anyway, so it's there. If we have any residents of Pennsylvania, then this would definitely apply. We could have it, but I don't know that we typically don't see it because we see very, very few actual Pennsylvania residents. Because of the rules, almost everybody is a non-resident, and then this doesn't really apply. All right. I am going to do this. Let's do one more here. All right, we're gonna show this. All right, we're gonna do Harold here. We'll do one more poll and then we'll stop them. So this is Harold. We all know Harold, right? He came here in 2024. Good Lord, I didn't update anything. He Came in 2024. He's been here ever since. What is his Pennsylvania residency? And then we also have another person, Michael. So Michael is studying at Lehigh. His parents are from Boston, Massachusetts. They're paying for his school. He can be claimed as a dependent. He's working at a computer lab on campus. So what do we think Harold and Michael's tax residency in Pennsylvania are? Non-resident, part-year resident, full-year resident. Remember Harold, our international student from Norway, came in January 2024. That's not updated, I apologize. Then Michael, he's on campus. His parents are from where he lived is Boston, Massachusetts. All right. I'm going to end poll. I'm going to share results. And I'm going to say that they are both non-residents, right? We said that if you are staying in a dorm or on campus or renting an apartment off campus, or sorority house or fraternity house, all of those things are not going to meet that permanent abode. So they are going to be non-residents. And neither one is establishing a domicile there. So non-residents of Pennsylvania, they both are. So, all right. All right, I'm going to walk through really quickly the Pennsylvania return forms just so you can see what those look like. And again, right, TaxSlayer makes our job easy once we know how to generally set things up. All right, this is kind of what the forms look like. Basically, the top has your name, your address, your filing status is on the side, single, married filing separate, married filing joint, non-resident of Pennsylvania. And then put your information here, right? W-2 information. Not going to have most likely any unreimbursed employee expenses. You're going to have net compensation. All of these other things most likely are going to be blank. So W-2 information goes straight down onto lines number 9 and line number 11. You take line number 11 times that flat rate, 0.307. Take your tax withheld. Do the math to find out, do you get a refund? Do you not? And probably it's going to be 0 because it's a flat tax rate, right? The employer can say, oh, I gave you $1,000 of wages. I know that it's going to be $30.70 of tax that you owe on this, right? There aren't any other deductions or adjustments or things that could change how much tax he's going to owe on that. So makes life a lot easier, means that most Pennsylvania folks do not have a refund, don't owe any tax. They also don't have that whole state taxable refund the following year issue as well. All right. This is the form, sign and date, send it in. Okay. Any questions on Pennsylvania before we continue on here? All right. Let's talk about Minnesota. So I didn't appreciate when I first started trying to teach people taxes that how complicated Minnesota was compared to other states. I thought it was just normal, but it turns out Minnesota is super complicated. Not super, but it's definitely on the more complicated end. So we're going to talk about Minnesota, and then that's going to be our last state that we're going to cover today. So for Minnesota, it has 2 rules for residents. The first one is domiciled in Minnesota, right? Same sort of thing. They also have a note, right? Students remain residents of the state in which they have their permanent residency, even if they go to school full-time in another state, unless they take steps to establish a new residency. If you are a resident of a state attending school in Minnesota, you may be considered a Minnesota resident under the 183-day rule, but changing your domicile requires both physical presence and an intent to remain there permanently or indefinitely. So domicile rule, which is not going to really apply to us, or Minnesota has a 183-day rule, just like we saw for Kansas, just like we saw for North Carolina. except not quite just like Kansas and North Carolina. It's a little bit more complicated than that. So the Minnesota rule is that you must have spent at least 183 days in Minnesota. Minnesota, at least to Kathy's point, does make it clear that any part of a day counts as a whole day. Then in addition, you must also rent, own, occupy, or maintain an abode. And an abode is a residence in Minnesota that is suitable for year-round use. Very appropriate considering the minus 40-degree weather we had this weekend. So year-round use that is equipped with its own cooking and bathing facilities. This applies for you or your spouse. And then if both conditions apply, you are a Minnesota resident for the length of the time that the second condition applies. So let's talk about that abode for just a second more. So a lot of places are going to meet that criteria as an abode, right? House if you live in a house, an apartment if you live in an apartment. Some places are not going to meet it though. Some places that are common for our students. So hotel rooms would not generally meet this because they're not going to usually have their own cooking facilities. Often dorm rooms won't meet this, right? Because they don't have cooking facilities and they don't have individual bathing facilities, right? There's a communal bathing facility. So sometimes dorm rooms can apply if they have their own cooking and bathing, like if they're in its own little, like basically mini apartments. But in the traditional dorm environment, would not meet the criteria for being an abode. So you'll notice, right, that those criteria don't necessarily have to overlap. It's very possible for you to physically be in Minnesota for 183 days and not be in an abode the entire time, and then you leave, and then while you're gone, you start renting an abode, even though you're not physically present, and congratulations, you have magically made yourself a Minnesota resident for that part of the year. And then you're only going to be a Minnesota resident for the time that you were renting. Even though you were not physically present, you would still be a Minnesota resident for that period of time. All right. So for Minnesota residency status, so to be considered a non-resident of Minnesota, number one, independent of what living environment you were in, if you were here in Minnesota for less than 183 days, you are a non-resident. Most students, when they start school, they start sometime in August. So August, September, October, November, December, that's 5 months. We're talking 150, 155 days. That is not going to meet the criteria for being a resident of Minnesota that first year. You could be present in Minnesota for more than 100 or at least 183 days, but if you did not, or your spouse if married, did not rent, own, occupy, or maintain an abode at any point during the year, you're going to be a Minnesota non-resident for the entire year. To be a part-year resident, you were here in Minnesota for at least 183 days, and then you and your spouse or your spouse rented, owned, occupied, or maintained an abode for some part of the year. Just not the entire time. To be a full year resident, you had to be physically present for at least 183 days, and you had to rent, own, occupy, or maintain an abode for the entire year. So January 1st through December 31st to be a full year resident. So what effects does this have? So only part year or full year residents are going to be eligible for either the Minnesota property tax refund or the new renter's credits. It's one big effect that it can have. Likewise, we're going to have that same kind of traditional, if you're a Minnesota non-resident, you only pay Minnesota tax on Minnesota income. If you are a Minnesota resident, you're going to pay tax on all income earned while you're a Minnesota resident. Minnesota does have a credit for taxes paid to another state. It also has a special tax for credits paid to Wisconsin. The bad news about this one, though, is that those credits are only available to individuals who are domiciled in Minnesota, rather than just individuals that meet that 183-day test. because our non-resident alien students can't be domiciled here in the US or in Minnesota, that means that Minnesotans are not eligible, our Minnesota clients are going to not be eligible for the credit for taxes paid in another state. That means somebody that's here in Minnesota, they have this wonderful internship. They go off to California, they do wonderful things, they come back. They are going to pay Minnesota tax on that income if they're a Minnesota resident for the entire year. And they're going to also pay California tax on that income. So they are going to pay taxes on that twice, which is kind of stinky. All right, we've already done this. All right, and then Minnesota has what's called an M1NR form, which is that same, this column is the total number, this column is the Minnesota number. Once again, this only really has an impact if you have income in another state, right? If all of your income is from Minnesota, then the numbers should all be the same, right? Your total income is going to be the same as your Minnesota income. But if you are a part-year resident or a non-resident, then that's a really valuable form because you're going to only pay Minnesota tax on your Minnesota income from when you were a Minnesota resident. Minnesota does have reciprocity with a couple of states, Michigan and North Dakota. That's that same kind of idea, right? If you're a Minnesota resident, but you go across the border to work in North Dakota, you're going to just pay Minnesota tax on all of that income. You don't have to file a North Dakota return. Same thing for Michigan and vice versa for all of those other ones. If they have taxes withheld in error because the reciprocity stuff wasn't really working properly, you can file and get a return of all of that, that tax that was withheld from the wrong state. For general Minnesota rules, you're going to use that same filing status that you did for your federal return. So single or married filing separate for non-residents. Minnesota does honor treaties, so there is that benefit. They do have a standard deduction for students from India. Everybody else has to itemize, but for students from India, they can get the standard deduction. The amount is not the same as for the federal return. Just like in North Carolina, it's a slightly different amount. Minnesota also does allow an exemption, right? That reduction based on people for dependents that are, you can claim as qualified children on your tax return. That amount is $5,200 and they have to be claimed. So we do see a very small but non-zero number of people that come through with that. I think that we probably won't see any of these, but I'm going to mention it just in case, which is that back in 2023, Minnesota did this. Everybody was doing these pandemic payments, and Minnesota was very late to the game, but they said, sure, yes, we'll give everybody $260 back. And that was a taxable income to all of the people that received it. So there was a bunch of stuff that one year. That should all be done. I think it's incredibly unlikely that anybody would get any of those payments. But just in case you see that, yes, this was a real thing. People got income from the state for COVID purposes, basically, but it should all be done. Hopefully all should be done. One more final thing for Minnesota returns, and actually this kind of mostly applies across the board, except for like a few like Pennsylvania, which is that if you are a married non-resident and you are filing a state return, it doesn't really matter if your spouse has a Social Security or ITIN number or not, you are not going to be able to electronically file your Minnesota return. And that kind of goes across the board for pretty much all of the states as well. I think Pennsylvania is one of the few exceptions because you can file separately. It's just a convenience. That also might be a lie, and you might just have to file it completely separately as well. The challenge is that most of these returns, when you file, use the married filing separate status, they want you to say, oh, this is the name of my spouse, this is their tax ID number. And the non-resident software doesn't collect that information. You don't need it for your federal return. However, without that, you can't electronically file this state return. It's got a block in it. So that means that those individuals will be paper filing their state returns. All right, we're going to skip this. We're going to skip Lisa, but we're going to skip Sunil, but we're going to talk about Emily. So, and I'm going to not do the quiz this time. We'll just go through it here. So if you remember, no, not Emily, we're going to talk about Olivia. That was who I wanted to talk about. So Olivia was the one we did first for California, right? So she was a senior studying material science. She grew up in Wisconsin. Her parents still live there. She worked at the University of Minnesota Professor's Lab during the year. So she was here January through, let's say, mid-May through kind of end of August. She went out to California. Then beginning of September to December, she was here in Minnesota. So we already said that she is a California non-resident, right? She was there for roughly 3.5 months, something like 100 days, 110 days, something like that. Let's think about her Minnesota residency. So number one, right? So she is not going to be domiciled in Minnesota, right? Her domicile is still back in Wisconsin, where her home originally was. However, she has been in Minnesota a lot, right? She's been here from January to mid-May, so that is 4.5 months, 130 or 40 days. Then she was here September, October, November, December, another 4 months. That's another 120 days. So she was here in Minnesota for something like 250 days. Now, I didn't say what kind of a living environment she had, right? Is she living on campus in a dorm room? Is she renting an apartment somewhere, right? That's going to be the one last piece of information that we need to know to be able to say what her Minnesota residency is. If she is living in a dorm room, if it's a place that's not an abode, she's going to be a non-resident, right? Because even though she's here for more than 183 days, she is not rent owning, occupying, or maintaining an abode. If she's got an apartment and she rented that for the entire year, she's going to be a full year Minnesota resident because she paid rent the entire year. And so the rules are physically present for more than 183 days, and then rent, own, occupy, or maintain. And if you do, then however long you rent, own, occupy, or maintain is how long you're a resident. So she could be a full year resident. She could also be a part year resident, right? If she had an apartment in the spring, then she gave up her apartment, and then she came back in the fall and got a new apartment, then she would be a part year resident. So depending on what her living situation is, just with this set of facts, could be any of the three options would apply to her. All right. Let's look at our forms a little bit here, right? So again, Minnesota forms are part of TaxSlayer. It's still great. Some of this stuff automatically flows. When you're a non-resident, things maybe cannot flow properly for scholarship income. That's one of those things we still need to do a little fixing on. Property tax returns can sometimes still need a little bit of extra help. We'll talk about that next week. Again, you need to know how to check it, right? Make sure you can fix things. Usually it flows through pretty well, but there are a few kinds of circumstances, like scenarios that you can recognize where you're like, oh, I know we need to go check this. All right. The Minnesota main form is the M1. They have an M1W form that reports the income tax withheld. A lot of times when you file your return on paper, you send in like the little pieces of your W-2 forms that come in the mail. You like tear them off and you have to mail them in. Very archaic. If you're electronically filing, it doesn't matter. If you're paper filing in Minnesota, they don't want those little pieces of the forms. You just copy that information over to the M1W and then send it in so they can scan it. Itemized deductions are on M1SA. Only charitable contributions. You can't deduct state income tax from your state tax return. They want you to pay tax on all of it. The form M1NR is when you pay tax on Minnesota income only if you worked in another state. There are a couple of credits that we'll see. The Minnesota student loan credit can happen. There's also the Minnesota Renters Credit, which we'll talk about next week as well. If you're doing the forms on paper, the process is kind of like we do with the federal. Prepare the supporting returns first and then put it all onto the M1. In Minnesota, like a lot of the other states, right, it starts with the federal tax return information. So you do your federal first, and then it flows, you copy some information over and kind of do some math from there. This is the M1W, basically the information from that W-2 form. This is the itemized deductions. Really, the one that we're going to see here is line number 15, charitable contributions. For the Minnesota individual income tax form, this is where like the name, all of that filing status goes in here. I'm going to take the point here to talk about the state election campaign fund. So we generally strongly encourage all of our non-resident clients to not fill out this form and to not fill out the form or fill out the little checkbox for the presidential, like $3 to go to the presidential election campaign. The reason why is from the Federal Election Commission. Federal law prohibits contributions, donations, expenditures, or disbursements made directly, whatever, from foreign nationals in connection with any election, federal, state, or local. This includes contribution or donations made to political committees and to made electioneering communications. Basically saying that if you are not a US person, you cannot give money to anybody's campaign or funnel money to any particular politician or party to, endeavor to try to make the outcome of the election benefit you. So we always recommend that students just leave this blank, right? The chances of this being a problem, I would have said previously, were very, very small, but this is kind of one of those, there's no reason to take any chances, just leave it blank, don't fill anything out. If you are a US citizen, of course, feel free to put whatever party supports your personal beliefs. All right. From the next part of the M1, we start with our federal adjusted gross income, and then we add additions, we do deductions, we do exemptions. Remember, people get money off in Minnesota. We subtract some refunds, and we get taxable income, get the tax, add in some additional credits. You can contribute to the Minnesota Non-Game Wildlife Fund, basically giving money for parks across the state of Minnesota. It reduces your income or your refund, but it gives money to a good cause if you like that cause. We take out how much tax has been paid and we get our refund. So same kind of general process. The software does all of these sorts of things. We don't really have to do a huge amount there. All right. That's supposed to be next week. We're going to do more states next week. New York is next week, all of that kind of stuff. Let's put it into practice. So let's talk about it. So it is 7:23, so we've gone for just under 2 hours. So the goal now, so nominally 7:30 to 8 o'clock is how long the training is supposed to go. So your goals for the rest of tonight, if you would like to do those. Number one, finish last week's homework if you haven't done that. Lots of people have made really great progress, but if you haven't, go ahead and do that. If you're still behind and trying to get through the fall stuff, like get through that stuff as soon as you can, please. It's time to be done with that. Next, complete the state questionnaire. What do you want to learn about? Tell me, right? I can't quite guarantee that I'm going to give you what you want, but I'm going to do my very best to do that. And then tell me, like, where do you want to work on? And then work on a state practice return where the taxpayer lives and works, right? So last week I said, hey, why don't you guys go enter Lisa, enter Sunil into TaxSlayer. Once you have them entered, right, it can be like 3 or 4 clicks to do a state return. The California return that you saw me do, right? It was 3 or 4 clicks, and then it was a little bit of residency, then a few more clicks for the shared responsibility, like health insurance payment. But if it wasn't for those 2 things, it would have been probably 4 clicks and we were done. Based on the state questionnaire, so I am going to release more scenarios for you to work on. Everybody's going to get a section for Minnesota. Those are going to probably come out on Thursday. Then I will release the rest of things kind of as you complete your scenario or the questionnaire. So if you do it between now and then, I will give you more stuff on Thursday. If you don't do it, I will give you until Sunday, and then I am going to assign states to you. All right. Next steps for next week, right? Complete the federal and state returns now for all of the scenarios, Moodle assignments for submissions. We're also going to start getting into give me your personalized guide. So we strongly, strongly, strongly try to get all of our clients that are non-residents to use the personalized guide. Go through that survey, answer the questions, because it gives them, right, the screenshot by screenshot, like put this number here, put this number there, right? We've got nice, really bright blue boxes that say, hey, put F1 here so that they don't miss line 1B on their 8843 of where that needs to go. So you also, as volunteers, need to be familiar with the personalized guide. Number one, right, it's going to make your life a lot easier in doing the scenarios, and that's totally cool. But then number two, right, you need to be able to like kind of recognize the information in it and parse your way through. Oh, okay, I see this on the screen and I see what this guide says. I can tell, right, that you just started clicking in TaxSlayer when you were entering your W-2 and your guide is back on the W-2 entry, but now you're on to like 1042S entry. So you need to be able to help them kind of work their way around both of those documents, which requires some practice. So you're going to be getting requests to include personalized guides along with scenarios, and I will send them back to you if I ask for it and you don't do that to me. So next session, whoa, Tuesday, February 3rd, not February 6th. I apologize. It's been a busy couple of days. So we're going to have some good topics. So we're going to do, we have a presentation from the University of Minnesota Low Income Tax Clinic, which is the free tax legal aid clinic at the University of Minnesota. They help people at the U of M as well as all around Minnesota if they have a tax controversy with the IRS. We're going to talk about working in multiple states. We're going to do Minnesota property tax refund or renter's credit. We're going to talk about other special circumstances, right? We need to be able to fix some things that commonly go wrong or that are common situations that TaxSlayer doesn't really do automatically. So we're going to talk about those. We're going to do an FSA demo so you can see the difference between the TaxSlayer practice lab that you've been using and the TaxSlayer FSA software that all of our clients are going to be using. They are very similar, but they are not the same. And then we're going to try to finish off as many states as we can. We're going to definitely get through New York and Maryland, and we'll see how far we can get into the Utah, Iowa, Arkansas progression. And then our final training session is going to be on February 10th, not the 13th. I apologize again. Probably we'll have a discussion or a brief presentation for the U of M folks about NRVTAP leadership opportunities. We'll talk about complex cases, right? So some of the most complicated situations that you might see in a tax clinic. We're going to talk more about the processes at the tax clinic, right? What to expect, how it's going to go. We're going to talk about the final volunteer readiness check. So what are the goals for that? What are the things that you have to do? What is the time to work on this? So we're going to make sure there'll be some time in the training to do that. And then what is your deadlines for this? Just as a quick reminder, I'll put it out there right now. You must complete the volunteer readiness check before you can volunteer at a regular tax clinic. The NRVTAP volunteers that are doing the pilots, they're using an alternative method for doing that volunteer readiness check, but they will also complete that before they are turned loose on any of our regular tax clinics. And then the ultimate deadline, which is after some of our tax clinics have started, but is the final deadline for that volunteer readiness check is the end of February. So it's a month away. It seems like a long time, and it will go really fast if you don't kind of stay on top of things. And we'll celebrate the end of training, right? That'll be the end. We're going to turn around and we will get to start doing the real stuff. We'll get to start helping people. And so with that, are there any questions? All right. If there aren't, I'm going to stop the recording. I will kind of hang around here to talk to Alec and then also to answer any questions anybody has for the next 30 minutes or so.
I have a question.
Yeah.
So the assignment for the Kim's